Good Friday morning, good people. It's Bruce with Targeted Wealth Creation. Back at ya. All right, I got a Coney update. No Pulte with it, and I'll tell you, Pulte did no trades. I mean, Pulte is dangerously, it's gaining on the synthetic, it's losing a little, but not so much that it had to do any trades. So we kind of want it in this range so it doesn't run past things too bad, but at the same time, we got synthetic money. All right, Coney. Coney, what? You can't even call Coney a pony. She's like a wild stallion or mare. This thing is running. Just let me out in the pasture. I want to go. Go, 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 go. This is where it had been and is now at 375. So now you talk about a massive new cup, right? We were working right here with this little cup, and this happens sometimes, right? You break out, you're going to come back and return to the crime of the scene and fill the gap because you don't always have a breakaway gap. Sometimes you just go up, right, and break the neckline that's referred to. So we didn't. That's sort of a bull flag. Then we took off, right? 375. I was thinking that 350 was probably all we're going to do and we're going to consolidate. But guys, we took off. Now, remember, when you go crazy, the synthetic still makes money. But look at this. Look at Coney, puny little Coney the pony. That's really a pony. The stallion is coin. 19.7. Do you remember a couple days ago when it was 14 here and we got like 9 or 10? Not so now, guys. Although when I look at the monetary side of things, it looks not so bad. So that's what I'm going to present. I'm going to go into great depth here and explain to you guys that nobody does it this way with this kind of depth because it's very time consuming. I'm only doing one video around this. And I've got some more better graphics coming for you guys and better summaries on all the funds that I'll cover. So, in essence, no trades happened, right? Let's go to the bottom line here. Up 19.7. Coney the Pony was only up 3.91. But hey, up is better than down. Um, the IV only went from 60.10 to 60.40. But I imagine, the high for the 52 weeks was like 98. This, guys, is volatility in the 90s or 100. It just hasn't caught up with the 30-day IV. This is kind of what you want. So let's go into a summary. I built these all out for you. I could just tell you the net result, but I like to show it to you. You tell people a story with colors and graphics so that a baby can understand it. They may not know all the inner workings of the, contract structure, but they get visuals. All right. So we've been closing off, and this is symptomatic of a Misty or, NVIDIA when it was running. This is what they do. Otherwise, you run along kind of flat. Pulte's only got one synthetic, and one synthetic is generally okay. And the worst thing that can happen is you keep going down and you have to roll to a lower price and sort of take your loss. But every time they close out something, they're big gains. Now, do we have losses where we've run by the call spread? Absolutely. I'm going to get into that. But here's our current situation. We're setting on a remaining balance. Remember, this was up like 42,000. Well, we sold off this 28,000 down here. So we took 28,000 and we sold them off and we collected 132 million. Now we had a little bit that we paid more for them than we sold, so I'm not showing that at the moment, but think of it more as a net profit of 132 million, even if it's 120 or something. It's not a huge difference, but there is a difference, and I have that data. but I much prefer to show it this way. This is formerly when they just closed off 2000. They pinched 2000 out because some people had sold shares and they needed some extra cash, so they sold two of their 40,000. Okay. This is the previous synthetic, right? This is when they had a 300 and they closed it out big time. And I said, yeah, they're going to pay us big, but they didn't. Okay. But in some fairness to that, there was a big paper, not paper, there was a big loss on the active, not 207. We still had 70, 80 million, but remember how many share counts we have. We have 154 million shares. So I probably could have been more accurate with that, but I had to do more work to get all of those numbers. Very complicated, guys, to keep up with all of that. But it's a labor of love too. It just takes time. Okay. So this is active, right? Open. We have another 107 million that are open. We're not anywhere. We're 21 days. There's no reason for them to roll this. Okay. I personally kind of think we could bounce a little today, but honestly, I think it ends up right where it is. It doesn't matter if I'm right or wrong, and I'm not trying to tell you I could even forecast that. I'm just saying I think we're in a good situation. I'll explain what I mean down here in the other actives. This doesn't matter. If we stay around 375, we keep all of this profit and keep going. Okay. But this is what's booked. This is what's booked. Okay. All of these add together. Because remember, this is all in the new pay period. Well, I take it back. I think this was in the old pay period. This clearly is in the new pay period, right? This was in the old pay period that I was like, oh, we got all that money. We should get 80 cents. They're not going to pay us a dollar because that's most of the money. All right. So here we go. This is relatively tame because we got one trading day to go. We're at 375. This got to go to 385 before we don't just collect all the, and actually at 385, we still collect all this money. Okay. So in my opinion, we're setting pretty good with one trading day to go. So you sold this stuff over here and for 6.5. Well, they're showing 8.6. Is it really worth 8.6? Not unless it ends up at $391. And if that happens, our synthetic is sky high. So we, for the first time in quite a while, I mean, they've been doing a massive amount of trades every day. That's why they're closing out these synthetics and rewriting. So we look pretty darn good. This 390 is showing basically $397 right now. And guys, we're at 375. So we literally can't lose with this setup. Because if they get anywhere near these numbers, our synthetic is just going to go from, the 100 million on paper value, the 360 and the 330 to being 250 million. So we're setting pretty for the first time. So 392. Look at this. They're saying it's worth 640. That projects out to 398. This was projecting to 397, 398. This was projecting like 392. So this is sweet. And they're allowing for it because for the second day, they've only bought. When you create a spread, you sell short the lower price, and then you determine if you want a $10 gap, $5 gap, $12 gap, and then you buy these. But I think of insurance because when you run, let's say that it ran up $50 today. Well, it would get up to this insurance level. But our synthetic would make all that money, but you'd get killed over here with a $50 gain, right? Because you would go all the way from 375 to 425. So every one of these would this would be ugly, but your synthetic would make it. So the mix is not to lose it here in these weeklies. And with this cushion, doesn't sound like a lot, 265, almost 465, 6, 798. However, that's one day. So we look pretty good. I'm seeing a net, and there's some gains here and some losses here, but I'm showing it should be 13152. Okay, that's showing about 767. Oops, that's not the whole story. I need to run that from 33. I changed how I view this sometime. Okay, from 33 to 41. Okay. So see, things like this is sweet. This 400, we sold 8,000 and we collected 6.2 and 5.95. Well, what are the odds at 400 that this thing's going to be worth anything on Friday? That stock would have to go another $25 just to wake this up. And if it closed at 400, we can buy it back for 5 or 10 cents. So this money looks pretty good. I just personally think now it may be volatility, depends on what CPI, it's not CPI, but PPI, whatever the data is for today, it may even be close to being out. We're only an hour and a half from the market started. I looked, and we're still setting in Coney around 375. So I don't, again, data can change the markets, but I don't expect coin to be 400. When I say Coney, I really mean coin. So this looks pretty good, guys, to sum it up. All right, let's go look at the data. Let's look over here. So this 340, well, is that right? Is the 343 really 343? Let me see my summary again. No, it shouldn't add this previous one. So I'm only going to run it through 26 because that was part of us getting the 54 cents and all that. So let's relook at that. It came in, okay, but it's not in this pay period. So this is a more realistic picture. Our weekly's loss, okay, now we could have a little bit of weekly gain, but going into this thing, we're down 148 million since this pay period started on the weeklies closed. And we've closed 211. So that's only about a 40-cent gainer. But we're setting on active without really setting on any more weekly losses this week. I don't see that at all. And even if we had a little bit, they'd be more than compensated with gains here. So we got another 70 cents. So the 41 cents and the 70 puts us up around that dollar. And we just need to cruise along and maybe get flat for a while and win our weeklies and don't worry about the sin going anywhere. So I'm pretty darn optimistic on coin. And I've loaded to the bear on coin and Pulte versus any other funds. I got little bits and pieces. I got a little GDXY. I got some Misty, but Misty's flat. Misty's dead for right now. The goat is asleep at the wheel. But, crypto's ebbing up. It'll have it. Everything has its time. This is Coney's time. This is coin's time. When it's time to run, you got to run. All right, guys. So that's it. That's what I got for you. This is just the 41 cents in. If I had to do an income and consider these, I'd put this right up here at 80 cents. But I tell you about it so you know why I'm showing. This is actual booked profits. Then we've got 41 cents. Well, we only paid, what, 53, 43, something like that, that we'll get today. So I'm happy. We've survived, right? I don't know that we've thrived, but we've survived. Sweet if you're in coin, baby. This tells me I need to reposition myself, though. I need to be in Roundhill. I need to be in some other funds that have leverage. Okay. So if you saw my other video that's out there from Bitwise on, what is it? ICOI. I always think of CIOW. I think of the Roundhill one, but we've got the Bitwise one. It's got Morrow and it's got MSTR and it's got the coin. So that's the competitive space here, guys. You got to stay on top of this. What we all have, old habits, old dog, new tricks, but a lot of times it's old dog, same tricks, right? So let's stay on the game and keep abreast of it. I got a lot more videos planned for the weekend, and I'm hoping the metals wake up. They're due. Silver's still got to run. It's doing pretty good. It just it's got to get through 36 and get into 37 again and break out and get to 40 and then get to 50 and then get to 100. And then I'll settle with 125 or something in the next couple of years. All right, guys, that's what I got for you. Sorry to go on, but this is important stuff. I want you to understand what it's doing, okay? Because just showing a couple of numbers and running through it real quick for me doesn't tell the story. You need to know what the story. So imagine a leverage fund now, right? You're not sitting here at 3.91%. If you're in a 200% leverage, this is where you need an MST on coin. That kind of strategy, or a NEOS, or a Roundhill. So they're going to be doing better. All right, guys, this is Bruce with Targeted Wealth Creation. I'm not a financial advisor. This is not financial advice. Have a great Friday. I think we all will, and a great weekend. All right, guys, bye for now.